It is Tuesday the 25th, and the markets got smashed pretty good here today. You can see we're clearly below the year-to-date volume-weighted average price. We're below the 20-day and the 50-day moving average, and when we look for other potential levels of support from volume-weighted average price levels, you can see we're slicing right through those. That's why we always call them potential levels of support, and the next one would be down at about 310, just above 310, and the 200-day moving average is within reach as well. The most important thing we can do is to continue to focus on what's the direction of and where are we in relation to the 5-day moving average. If you're interested in catching bounces, that's fine, but as far as low risk, high probability swing trade setups, which I'm here to help you provide you with, I'm not interested in telling you that this is a good place to purchase the market, or just to go beyond pointing out potential levels of resistance, because as they say, fear knows no support. So with that said, again, the next level of interest would be this volume weighted average price right at about, let's take a look at that level together and just eyeball it here. It's not a you want to look at it, so about 309-ish, let's just say. You want to look at it as a level to look at the market a little bit more carefully, and then look for evidence on a shorter term time frame the buyers are gaining control. Certainly the market looks like it's due for a bounce, but we have a very serious health crisis going on right now, and the reaction to that is one of panic and fear in the markets, and they can take things to a much more unreasonable level on the upside or on the downside. We can also look at a trend line that looks like this, and that is another level that's down, closer to 300 even. The point is, nobody knows where the market will halt its selling. Our job is to stand aside and wait for evidence of a low risk, high probability entrance on the long side. And if you're short, continue to just lower your stops. That's the name of the game. When we get below that 5-day moving average, I said it last Friday, this has been my number one indicator for saying when to stand aside as far as the overall markets. For the last 15 years, I've been talking about where are we in relation to the 5-day moving average, and we don't want to be a buyer with the direction of the 5-day moving average is lower. That means we'll miss buying the lows, but that means that we will also avoid making guesses, and we will be in the camp of reasonableness. The volume weighted average price from the October low is coming up right at about this level here, which is, let's again look at that together, looks like at about 211.5. And I never look at that and say, oh, I need to know the exact precise number, just like a 50-day moving average or anything else. I'm not looking for the exact precise number it's at, because I'm looking at as a reference point, an area to compare price to say, do I need to look at things on a shorter term basis for evidence the buyers are gaining control? And then when I look to that shorter term time frame, do I actually see any evidence? Here we can look at the volume weighted average price from last week's peak, from yesterday and from today, and you can see we're below all those. So there is no evidence the buyers are gaining control. Why on earth would you want to just stick bids in there and play guessing games? We've had a huge rally. The market's been looking for an excuse to sell off. This seems to be it. And again, nobody knows where it's going to end up finding true support. True support or resistance is only known after the fact. The volume weighted average price from the October lows in the Russell 2000, we had a strong bounce there once. We halted at it yesterday, but smashed through it today. We didn't hold above the rising 200-day moving average either, because we don't look for evidence. We're not looking for the potential to buy. We're looking for evidence that the buyers are regaining control. And again, there is no such evidence. Look at the 2-minute time frame. We can put a volume weighted average price off of today's, and that's not even a 2-minute. There we go. Off of today's action, which actually goes up there, and we were below the declining volume weighted average price all day, meaning the sellers were in control, and that trend to the downside was accelerating all day because the volume weighted average price was declining. And to try to be smarter than the rest of the market and buy that, Good luck is all I can say. Semiconductors got hit, of course, as well. This group is down to the volume-weighted average price from that October low. We clearly, the market laughed at this trend line, and it got, below that yesterday. Now today, we are looking like we're continuing lower, perhaps down to where? Maybe the volume-weighted average price from June. Perhaps we undercut that 200-day moving average. There's nothing that says a 200-day moving average has to provide support, or the 50-day. You look at the 50-day, they're even starting to flatten out. That's how severe these sell-offs are. The biotechs also got smashed. We were looking at these things bullishly a couple days ago. They broke down and we said, forget the bullish scenario. The sellers have regained control. We're below declining 5-day moving average. Anybody can guess where it's going to end up. The market will let us know. This has been an important volume weighted average price previously as we bottom near that. Maybe it will be again this time. We simply don't know. But I'm not going to be early. As I like to say, it's better to be early and it's better to be late and right than it is to be early and wrong, because you're going to just continue to feed and feed and feed your account and feed that monster that's taking your equity away. Financials got smashed all the way down to the 200-day moving average. No volume-weighted average support level, price level held as support is what I was trying to say. So we look at this and say, okay, the volume-weighted average price is a tool. It's not meant to be something that provides value each and every time. It's a reference point, just like the 200-day moving average is a visual reference point to say, compared to the trend of the last 200 days, where are we? Well, we're back down to this prior level of resistance. This certainly seems like a level to be interested. We can look at Fibonacci and say, is there any evidence that further suggests this might be a level of interest? Well, we've retraced 50% of the August lows to the February highs, and we're at a 200-day moving average, and we're at the prior resistance. So this has the potential to become support. Let's look at the shorter term time frame. We're below declining 5-day moving average. That means it's guilty till proven innocent. Let's look at a 2-minute chart. Here, let's just look at today. Sellers are in control. They were accelerating their control throughout the session. There is zero evidence the buyers are gaining control. Some people might say, oh yeah, but look at this action. Well, look at that action. Even if we look at the last, even from this little peak to there, we're still below these volume. You go crazy with the volume weighted average price levels, but at some point you've got to say, what's the bigger, more important time frame? Is it the 15-minute time frame where we're below a declining 5-day moving average? Is it the daily time frame where we're below now declining 50-day moving average, but we're at a 200-day moving average? To me, when you have mixed messages and it says it's a level of potential interest, it means be interested. It's not a level of action. Wait for evidence before you actually commit your capital to a risk position in the market.